After Bitcoin's first major push, the market has given us a replica, a perfect replica that would have reached $107,000, a key reaction point where now the price is broken above. This alerts us to a possibility. Are we looking at a potential trap scenario? Let's take a closer look. Right now, you're seeing the Bitcoin chart on the weekly time frame, and as you well know, markets move through harmonics. They give us a first impulse, they work through some sort of pause or corrective pattern, and then they tend to give us a replica proportional to that first move. We see this behavior constantly in the markets, and you can clearly observe it here. Notice the first impulse and how after a brief pause, the price mirrors that move, and now the most important replica is the one you're seeing right now, this bullish replica. As you can see, the market has recognized it perfectly. Look how something so simple is at the same time so powerful. Watch how the price reaches the harmonic target. It hits the target and reacts. It was so strong that they worked through a distribution process to reach an institutional target, a level from which Bitcoin has now ventured past its all-time high set back in January 2025 to deliver a brand new bullish impulse. And it's interesting to see how the average retail investor finally seems to be waking up. I think it's clear that Bitcoin and the entire crypto ecosystem are in a strong bullish trend. The real beauty, of course, is being bullish from much lower levels, but the reality is that when prices are low, retail investors show no interest. They only wake up when the price is already sky high. That's just how financial markets work, not only in crypto, and that's why considering the possibility of a potential market trap in a context where everyone is bullish can be dangerous. That said, let me be very clear on this. Here at Crypto Insight, we remain bullish for the mid to long term. Talking about a potential alert is one thing, but if you're well positioned in the market already, this alert shouldn't make you close all your positions. It's much more prudent to wait and see if this alert is confirmed, if the trap actually plays out. If it does, and if you've been positioned from much lower levels, then you'll be able to take action. Meanwhile, since we don't have a crystal ball and maybe this isn't a trap, because it doesn't have to be, we will continue to favor the long side for the mid to long term, but careful, not for the short term, because as you'll see, the long-term trend is not about to change. However, just like with Bitcoin, we have other assets, other cryptocurrencies that are alerting us to exactly the same thing. In the case of Ethereum, it's getting close to reaching the top of this macro range, and this could represent a structural market extreme, considering everything Ethereum's price has historically done. Since as far back as 2021, the $4,000 level has been a key level, and we're practically there right now. Then we have XRP, and pay attention to how important this is. Let's move to the daily chart. Here we have its all-time high, and you can clearly see that they've already generated a confirmed trap. They pushed above the all-time high, attracted the average retail investor who bought high and wrong, and the institutional players have already driven the price downward. From a 4-hour perspective, it's clear how the price breaks above the all-time high and then starts distributing at the top. This distribution pushed the price to target number 1 and then to target number 2. But if you look closely, at first glance, we don't have a clear structure to rely on and say, relax, an immediate V-shaped recovery is coming. Instead, a lot could happen here. Why not live through a bearish harmonic now? To go and look for recognizable structures that actually make sense. And does this mean it would be the end of Bitcoin's rally and the altcoin rally? Absolutely not. Not necessarily. We need to see significant structural breaks first, like these structures that don't even exist yet. If those were to break, then yes, we could probably talk about a bearish market. But look, we can give the price some room to fall without triggering the big alarm of, hey, let's switch sides, let's stop being bullish and become bearish. Now take a look at Solana's chart, which looks very, very positive. Honestly, it has broken a creek here, and this could be very promising. But how many times have we seen an attempt to break a creek only for it to turn into nothing more than a trap? A bearish continuation could still arrive, especially in a context where the average retail investor is extremely bullish. We've also identified an alpha angle in this bullish channel, which helped us understand why the price reacted exactly where it did. Of course, we've broken a creek, and that's very important, a strong, aggressive break, but we know what we went looking for. If we dropped aggressively to the 1-hour time frame, here at Crypto Insight, we were tracking how that creek break was losing traction, how it was losing all its momentum. And this black swan event, well, it's totally understandable that it happened. At least to return return to the origin of the breakout and perform a test on the creek. Now, the most optimistic traders might be thinking, come on, we've got everything we need. Let's just do the test and push higher. Of course, that would be the most favorable scenario for the crypto ecosystem. But if you ask me, I'm not entirely convinced that this is the scenario institutions will choose. Honestly, I think they'll want to scare people a bit more. They'll want to shake off any idea retail investors have of buying now. They'll scare them just enough to kill that enthusiasm. Getting back to the 4-hour chart on Solana, look at how natural and how possible this could be. If on one hand we go for a test at the origin of the breakout, why not take a little run up to look for a harmonic pattern? Why not seek some liquidity, some type of structure from which we could eventually continue this bullish crypto trend? The only thing I want to convey is that there's clear euphoria among retail investors, and we need to be very cautious with that euphoria. That's why I said from the very beginning, those who are long in spot from well-positioned entries, great. I wouldn't touch anything. A possible drop wouldn't scare me because we're still bullish in the bigger picture. But we're warning that consecutive drops in crypto are possible. And now you're going to understand this much better with the open book, which is the BNB chart. Take a look. Let me explain. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
You're now seeing the BNB chart on the 4-hour time frame. Here, we've experienced a major black swan event, an absolute madness, celebrated in a wave of euphoria. But look at how the chart has revalued itself. Notice this bullish excursion, how malicious it is. It's nothing more than a market trap. And that's exactly the kind of potential scenario we're considering, one that makes us believe something similar could happen to Bitcoin on a macro level on the weekly chart. And look how this trap has pushed the price on BNB. This simply alerts us to that possibility. Let's consider this entire move as a single impulse. Why not wait for some kind of microstructural trap to look for a bearish replica, either to create a trap around that zone or to search for structures much lower, where we then start evaluating future moves without losing sight of the mid to long-term bullish view. Because yes, we can remain positive, and anyone who's been long from lower levels can stay long. They're very well protected if they bought correctly. And now I want you to take a look at this blockchain chart, where we're going to analyze the flow of Bitcoin into exchanges, focusing specifically on whale activity. Basically, pay attention to when whales decide to move Bitcoin into exchanges. You can see this through the purple histogram. Those big spikes represent moments when whales are depositing large amounts of Bitcoin. This can be interpreted in several ways, although the most standardized and commonly accepted view is that whales sent Bitcoin from their cold wallets to exchanges in order to sell it. And honestly, that makes perfect sense. Look at those massive inflow spikes. See how at that moment, Bitcoin, represented by the black line, was making new highs. Right after that, there's a clear deceleration followed by a downward trend. Once again, we see another major spike in Bitcoin inflows to exchanges. And look at what the Bitcoin price does here. It had been rallying strongly, but this is exactly when distribution starts, sending the price lower. Of course, we're highlighting the most significant, most dramatic points here, but there are also other moments where we simply notice a strong acceleration in whale inflows to exchanges. For example, you can see this more directly in the daily net inflows. I'm not sure if you can see what I'm pointing out here at the bottom. The other histogram is cumulative. It's a 30-day rolling sum, almost like a moving average. But notice these key moments. Right here, there was an important spike, and Bitcoin fell afterwards. Here's another significant moment, and again, Bitcoin dropped. In both of these cases, look at where Bitcoin was positioned when the drop happened. As I said, all of this makes sense, and recently we're seeing another major point of interest. Bitcoin has already fallen from it. It doesn't have to be a massive drop, but it makes sense that it reacted. Now, I'm not sure if you can clearly see this very long purple line stretching all the way up to the price level, but it represents the largest inflow spike since October 2023. That's why it's so important to keep in mind that whales are now dumping Bitcoin into exchanges like crazy, and this could be alerting us at the very least to a potential corrective phase. It might be a small correction. It doesn't have have to be the beginning of a bear market. It doesn't necessarily have to be like these brutal cases here where the price was tortured for months. It doesn't have to be that way at all. This could simply be a specific circumstantial point that invites a small correction. A specific point, a correction. A specific point, a correction. It doesn't have to be anything more than that. Now, if you look at the Chainlink chart, we've broken a creek. Quite a feat. Of course, it raises the possibility of a potential market trap. Anything can happen in this market. What's also striking is how Chainlink has practically jumped from its house, throwing itself into breaking that creek. Could we get an immediate continuation after such a move? Possible? Sure, it could happen, but it's very uncommon, very uncommon. And honestly, I'd rather be a bit suspicious and think that they'll want to shake out those overly optimistic investors first. If we drop to the 1 hour time frame on Chainlink, we can see the breakout, the distribution, a black swan event, a push, and now a clear supply line. In my opinion, after a small correction, why not go for a replica move to grab some liquidity? And from there, we'll see whether it will turn into the real bullish move. But the alert, the caution, is exactly here. Then we look at XLM, stellar, and we've seen a massive revaluation, 127% in a very short time. And of course, one has to ask, when is a small correction coming? Especially since we've hit a key zone that's now being rejected. Not only rejected, if we switch to the hourly time frame, you can see the deceleration clearly. It came in like a torpedo, but now it's struggling to keep climbing. It's losing conviction. And hey, after gaining 127%, it's already done a lot. Institutions have taken advantage of this to distribute and push cryptos downward. And XLM has already hit its first institutional target from that distribution. That's exactly what I was saying earlier. We're in a context where if cryptos want, they're already at a point where they could give us continuation immediately. This possibility exists. It's on the table. But if you ask me, I think it makes sense they might want to do a bit more damage first. It won't be that easy. They want to shake off retail investors who are now turning bullish. Of course, after seeing XLM pump 127%, that's when retail wakes up and says, okay, now I'm going to start buying. Careful, don't misunderstand me. If this is the 4th time I've said it in this video, maybe I haven't said it enough. At Crypto Insight, we remain bullish on the crypto market for the mid to long term. That hasn't changed. If you're well positioned in spot from lower levels, relax. Let them scare the retail crowd. Let it correct a bit. If that happens, we'll analyze how far we can allow that correction to go before saying, okay, no, we need to close everything. We'll evaluate that if and when it comes. What I'm explaining in this video is why we're currently in a key context where this macro market trap hypothesis, at the very least, could provoke a small short-term correction. Now, look at MicroStrategy. Just like in other cases, we've seen a strong bullish impulse, and all of this is just a correction that broke the creek to the upside and now seems to be testing the origin of the breakout. If we move to the 1 hour time frame to really see what's happening inside, look closely at this. Yes, we've broken the creek very cleanly, but where did we come from? We came from a strong bearish impulse that formed a W, a weak Y, and this is a Z that collapsed into a wedge. And that collapse, it didn't even go looking for the Z trend line, it's already pierced through it. This opens the door, gives wings to the idea that MicroStrategy could want to go for the opposite trend line, and if it wants, it could break it. I want to stay optimistic. I want to believe it won't break it. But given how it broke this wedge and the way it did it, the short term doesn't look very positive. Even more so considering whales are pushing Bitcoin into exchanges. Now, that doesn't have to mean the end of the world. We're talking about a small short-term move. The weekly chart is a completely different story. Don't lose sight of the fact that both MicroStrategy and Bitcoin remain bullish in the mid to long term. Really? Are you going to say cryptos are bearish long term? What, did you hit your head or something? The short term is one thing, the long term is a completely different conversation. In the short term, look, you can clearly see there's another story here, another narrative. Different things are happening. Ideally, at some point, MicroStrategy would offer some kind of correction, then deliver a replica move, and the perfect scenario for crypto optimists would be that this replica doesn't reach the defense zone, that it leaves a gap and that would be a huge signal for strong bullish continuation across crypto, and that's pretty much what we want to see in general terms for the crypto market. Although you'll understand this much better once I explain some key points I'm seeing in the total 2 and total 3 charts. They're basically an open book. Take a look at the total market cap chart, including Bitcoin and Ethereum. We've had a very key structural black swan event, which has pushed crypto higher. And now, if we evaluate the institutional target of this bullish reaccumulation process, check out one of the projections. Right here, this first projection worked perfectly, and we have a second projection. And again, look at how the price reacted. These projections are powerful. There's an entire theory behind them. But the point is, the price has already hit its target. It came in with a strong impulse. Now, there's a deceleration, and the structure has just been pierced. But to its credit, it's still respecting the defense zone. That's why I said there's a hyper-positive scenario where crypto could just shoot up sooner rather than later. Of course, that could happen, and that's why we remain mid to long-term bullish. It's possible, but honestly, I'm not so convinced for the short term. After this impulse, I think at some point there will be a replica move, and they'll try to shake the market a bit. That's the ideal short-term move to stay positive overall. Now, let's look at the total 2. This is the market cap excluding Bitcoin. The total 2 is basically bullying Bitcoin right now. We have a key structural defense zone here, and look at what's happening. If we go down to the 1-hour time frame, we can clearly see that after a strong impulse, the entire crypto ecosystem has gone through a deceleration process. This chart even lets us identify the alpha angle to pinpoint the extreme. There's the trap. And there's the collapse of the positive structure, the black swan pushing us lower. That's why, in the immediate short term, it makes sense to expect continued bearish moves in the crypto market. Now let's check the total 3. This excludes both Bitcoin and Ethereum. And look at how, after an accumulation phase, the price has already hit its institutional target. That's why we're seeing this correction. Zooming into the 1-hour time frame, sure, it missed the target by a centimeter, but we'll consider it valid. Look how we've had another black swan event, pushing the price down, just like in the total 2, the total, and many individual assets. There's a demand line here, and in my opinion, at some point they're going to manipulate it, so we're likely to see at least a bearish replica move down to that structure. Would that be the end of the world? Of course not. But to wrap up this video, no matter how bullish we remain for the mid to long term, and yes, we remain bullish, even if right now I'm alerting you that this weekly Bitcoin chart could be forming a trap that sends everything downward, even with that alert. Today, I wouldn't prioritize that bearish scenario. That's why we stay positive for the mid to long term, but for the short term, yes, small drops make sense. Later, we'll reassess whether those drops actually increase the risk to our positive long-term view on crypto. Now tell me, what do you think about these whales dumping Bitcoin into exchanges like absolute maniacs in a scenario where even a 5-year-old can see cryptos are bullish? Do you think whales are about to sell everything and send the markets lower? Let me know your opinion in the comments. And if you enjoyed this advanced technical analysis, hit the like button, subscribe to the channel, and click the bell so YouTube notifies you about future uploads. Good luck with your trades, and see you next time.